Hi everybody, it's Ed back again with another hopefully interesting and informative video. I've been playing around with whole moving averages. We used to use whole moving averages a lot in trading back in late 2015, 2016, into 2017. And then we started getting into a lot choppier markets. So the whole moving averages didn't work as well on the settings that we used to use. We had flex Renko bars. We had like a 10-7 flex Renko bar on NQ and a whole moving average of like 20, 25, 26, 27, 28, 30, right in that area. And it marked the turns pretty well, okay? Well, I was playing around with 18 HMA earlier today. Stuck it on, various charts, and I go through a lot of different charts, a lot of different look at different things, okay? To say, okay, what is going to be able to get me, number one, get me into a decent trade. Number two, keep me out of the chop and into the trend, okay? So what I started looking at was, looking back at these whole moving averages and line Renkos and all that kind of stuff. And I found an interesting correlation between the 18, and let me verify that is actually an 18 HMA. Yeah, it says it right at the top there. Whole moving average, that's an 18 HMA, okay? And what I do is I just draw a line on a chart. Just a dotted line on the chart, no big deal. I have some other things on the chart. You can see where your value area high, value area low is basically here. And I've gone through this in other videos before, and I'll show you real quick here. What this is the daily VWAP, and these are extension. Here's your daily VWAP right here, and you can see it. Okay, here's your extensions. Okay, and this is like like 2 to 2.5. Okay, I just draw a cloud up here. Okay, because what happens is in Globex, it's really interesting in Globex, the market tends to go from value area high, value area low, value area high, value area low, write it down, pop up, come back down. Here's your retest. Okay, 1, 2, 3 retests, and then value area high, and then turns it right back around, and then comes right back down. And this is a Globex London type session trading. Okay, and then comes down, right? Comes down here, almost comes back to the daily VWAP, and then heads back down. Okay, nice short, and then turns around down here. Now, my big problem has been, how do I know when this trend, the trend is your friend until the end, right? How do I know this trend is ended, right? Now, number one, how to keep out of the chop. Number two, how to keep into the trend as long as possible, okay? So, I'll show you a little trick that I noticed today. And I've been playing around on different charts and scrolling back, and this is a very reliable thing, okay? In Globex, you will almost always see this chop back and forth between, value area high, especially in the beginning. Here's there's my 1800 bar. And I started this off here because a little bit early, because I wanted to see how this was going to work out in terms of started early, so you can find, instead of starting at 1800, because 1800 you have a very, 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 very small range. You'd have like a very small range, like right here, and then it would expand and contract, and it's not tradable, okay? But this is, if you got this thing right here, okay, you've got a I'll just put it here. Just here's your box. Here's your resistance box, okay, and here's your support box right there, okay. So that's tradable. That's 52, 17 to 52.10. I mean, it's 7 ticks, or sorry, 7 points. But I mean, it's tradable. I mean, it's scalpable, okay. I wouldn't want, I think I'd rather have a little bit more when this thing flattens out. and then I can get in. I can add 1, 2, 3 right there, and then take them all off right there, and it turns around. Okay, so that's the beauty of this whole thing. That's number one. Okay. Number 2 is I've got 3 things on this chart that are going to be very, very helpful. Okay. Actually, yeah, there's 3 things here. I'll show you. So here's your value area high, value area low. And you will notice price action, and people go, oh, price action's random, blah, 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 blah. You know, I don't know where to tell when it's going to turn and blah, 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 blah. Okay, guess what? I can tell you where it's going to turn. Right there, right there. See where it came up, down, turned right there, pull back here, and then up here, and then turn back around. Now, how do I know that? Okay, and this is all, you know, this is kind of choppy crap. You might want to play the edges of this. You might not want to play this. Well, see where the whole moving average kind of flattened out, right there. It's not going anywhere. That's flat, so it's not going anywhere, right? Now, when it starts doing this number, when it starts turning down, that's when you got your nice price action. There's your turnaround right down there. Value, poke back down to value area high, right? Close back up here. And this is a 6-tick aligned Renko. This is, you know, you may not want to trade this unless you've got, you know, either trading micros or got a big account to where you can have fairly wide stops on this stuff. I mean, you're looking at, you know, from 5203 to top of that bar, 5208. So you're talking about 5 points, right? But once it turns around, see, once this thing turned up and it turned around, bam, it went to the upside. Where's it going to go? Right up here. Now, as long as it's trading above that VWAP or above the whole moving average, okay, you could almost take VWAP off there, because if you've noticed the daily VWAP, it'll slice back and forth and back and forth and back and forth. It's sometimes not reliable. You can sometimes get one bounce off, and that's about it. This was basically a pullback to the VWAP and then back upside. You would see that on a smaller time frame chart, but you're not going to, you know, you'd see it there, but, you know, if you wanted to trade that. So, but this is much more reliable. Now, when it comes back up here, it turned back down, it closed below it, and you see where it turned around and gave this nice, beautiful trend right there. So you're below the cloud, you close below the cloud, you close below the 18 HMA, take that short trade, baby. Your stop might, you know, your entry is like 52.15.50. Your stop could be up here at the swing. That's 4 points, okay? That's like 20 ticks. But if you're trading in 1 micro, that's $20. You got a $20 risk for, let's see, 52.15.50. You're coming right back down here, back in this area, right in here where you're starting to pin off this guy, right? So you're looking at, you know, and that way you don't get faked out by this. See that fake out? Oh, we're going to come back up. We're going to come back up. No, we're not. Boom, there it goes. You don't get faked out, right? Because you've got this whole moving average pulls. You know, you've got these bars. You've got this one here. You got 1 bar right here. Well, it comes back up against you, right? But you haven't penetrated that whole moving average. Even there, you just got a pin. You got a pin. But the whole moving average is still coming down, right? So now you get out, okay? So you're looking at like, you know, 50, say 52.15, okay? Yesterday's, and that's yesterday's close. 52.15, bam, all the way down here, right? To 52.02. So there's a $500 trade right there, or $50 trade if you're trading the micros, 1 micro. $50. Hey, $50 in your pocket, right? Pretty little, very little risk. So coming up, back up here, you're still see this. It's starting to turn. It's starting to turn a little bit, but you haven't started. You don't see a turn like that or like that. You're seeing a very gradual turn, which basically means just pull back. Okay. If you're getting I haven't measured this. I haven't measured the angle on that, right in here. What's the study angle on that? I don't know. But once and somebody, you could put a study angle on this and try to find out what is the angle there when it pulls back up for a significant move versus pulling back down for something like this. Just that's like not even 45 degrees. That's probably you're looking at a 45 degree and then greater up here. But you want to know down here, right? You want to know here. Look at that. It pulls back like 3 bars, right? 1, 2, 3 bars here, right? Let me put a little box around those, okay? 3 bars. See how sharp that is right there? 3 bar pullback right here. And I'll just pull this up here, okay? See how much shallower that is? That's a pretty shallow pullback. And then what happened? Boom, came right back down. So if you wanted to, if it closed up here, you could get out of your trade, and then comes back up and then comes back down because you're below your daily VWAP. You've already hit buy area high. It's starting to sell right here. You can just get back in once it closes. Once it hits that, once it hits that area, closes down below that the whole moving average. Boom, 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 boom. Look at that. Look at that sucker. Okay. Now here's where it turned around. Okay. Where did it turn around? And I'll get into the third thing on this chart that's going to be very valuable. See where it started turning here. It's coming out of it's below the cloud. Okay, which is normal. You're below the cloud. Now number one, you turn right here, right in this area here. Okay, you're broken above the cloud. Right? This is your value area low. You're broken above the value area low cloud, started back up, pull back to the cloud. So you don't want to keep your, you want to keep your stop back a little bit. Okay? But look at the sharp angle here. Look at that angle. And I'll just draw these on these 3 bars. Okay? Look at that angle right there, okay? It's almost as sharp as that angle right over here that I showed you going back up, okay? It's not like that. It's like it's a bit more than that right there, okay? So you've got that study angle, or you've got the angle of the whole moving average coming back up. You're above the whole moving average, right? And you could even, you're above the whole moving average, right? You got a red bar. You could even buy the bottom of that red bar if you wanted to. Okay? Boom. There you go. Okay? Came back down, touched the bottom of the cloud as it came back up through, came out of the cloud, back up through that 18 whole moving average. Boom. Take that trade. And there you go. You could use all kinds of stuff to walk your stops up. Whatever you want to do. I would not move I would move maybe the 18 HMA. I would not use that as a stop loss, but I would say like the bottom of 2 candles back. So you're right here. There's your stop. You're right here. There's the body. There's your stop right there. Right. So as you come up here, there's your stop right there. You didn't hit it. It came close, but you didn't hit it. Whole moving average is still pointing up. Now it turns back around, okay, at open. Look at that. Pretty interesting. So you're taking the whole moving average right there. It comes back down, right, back up to test the daily VWAP. Didn't even come back down to RTH open, and came back down here. Okay. Now we hit. We come back down here. It's it's starting to flatten out just a little bit. You don't have as nearly sharp an angle. You don't have a sharp angle here as you do a sharp angle here, but you don't have it here. Okay, so it's cutting through. It's not clean price action. Right here, you have price action. All those bars are above that. Those bars are below that. And now you have it cutting through. Right, you have it cutting through. Pull back. You could take this with a scalp, but you're cutting through these wrinkle bars. So it's a little choppy. Okay. Now you start, the first time you start looking at this guy, right? Now you could buy that if you wanted to. And there you go. Buy. As it breaks up and it makes that nice angle there, you could wait until, you got a clean bar here, right here. You could wait until you buy it. It's still going up. You don't get out here. This is chop. But you don't get out here. This is a pullback to the RTH to test RTH open. There you go. You're buying it. You're buying it. Okay. Now there's a flattening out right here. You close below it. You could get out. Take your profit. You could get out. Right. Comes back down and goes back up. As it closes above that bar, just take it. Just take your next entry long, and there we go. Okay. Now, see as it's starting to chop. See as the aligned wrinkle bar starting to chop through this guy. Okay. You get a little bit of run there, a little bit of a run there. You're looking at 52.35 to, for example, down here. You're looking at 5, 6, 7 points. Okay? That's $250. On the S&P, $250. I mean, that's a nice chunk of change. Close below there, keep your stop up here, and take your profit. Go down because it's starting to chop a little bit, and you can see the candles going back and forth and back and forth. The 18 HMA is kind of turned into like a snake, right? So that's chop. That's what you're looking for. You're looking for this pattern. You're getting clean price action either above or below that HMA. When you see candles coming back and forth, running right over the top of that 18 HMA, that's chop. So it's a good way to see that. Okay? Now, see, right here, you got a fairly clean price action, but you started back into the trend. You trend up, started back into the trend. Okay? Now it's rolled over. Okay? That's 1600. So now it's rolled over. Now, where is it? Where are we? Nice. See as it rolled over right there? Okay? Price action, you started trading below that. It rolls over, takes a nice little deal right there. Okay? Take your pullback right there for the short. It's already pointing down. It's going to, you're short biased, right? You're not long biased anymore. You're short biased. Boom. Take that short. Okay? As you can see, for example, right here, where you didn't get as clean, but you got fairly clean. Right here. See where it turns over? See where that trend change is? Nice trend change. You can see a nice trend change down here, right there, right there. Even though it's cutting across all that stuff, because that's just choppy crap. I'm not gonna, I wouldn't want to trade that, right? But you can see where these things come up and come down. Nice little loop, and price action is kind of following that. When price action kind of follows that, you're gonna have a nice trend. Price action started to follow that guy. See where it looped, and now it was starting to cut through these candles. So that's chop. You don't want to mess with that. You want to wait until it closes above it, or back here closes below it. Okay. So that's number 2. Number 3. And this is something that a lot of professional traders know, a lot of institutions know, a lot of retail traders don't pay a whole lot of attention to it, okay? Or they don't even know it. And what I do, you'll notice these lines, okay? I post open, high, low, and closes for the last 7 days, okay? And I'm going to put RTH opens and closes on there to see if we have any correlations. But you'll see right here what happened. We came back up here between yesterday's close and that T+4 low, right? And you could see that action right there. Here's that T plus 4 low. There's a T plus 3 close. That's the fourth day back. The fourth day back low, the third day back close. Okay. And you can keep your stop up here, right? Take your short at yesterday's close, commensurate with coming out of that value area, right? Reject to the upside, reject to the upside. Where do we go? Down, okay? We come down, we come back up, right? And if you'd have gone long here, you could use these as that target zone. Here's your target zone right here, okay? Comes back up here because they know stops are going to be back up in here. And yes, I know these Rinkos are not exactly precise, and I know that, okay? I'm just doing this in terms, I'm just trying to educate you in terms of trend. Keep out of the chop, keep in the trend, and get some reasonable targets up here, okay? There's a reasonable target up there, and then come back, as it comes back through here, even if you got out, okay? If you went short there and you got stopped out, that's okay. You just, so what? As it comes back down, there's where you take your trade. Yesterday's close and that red candle closing outside of the cloud, take the trade, okay? Now, boom, 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 here we go down, go down, go down, go down, go down. Where do we turn around? Where do we turn around? There. The 5 days back, 6 days, the 6 day close, the fifth day open, right? And you have confluence between those two lines right there, okay? As you had confluence, see how close those are together? And those were resistance. And how close these were together. These are support, right? And the market obviously is respecting these, okay? Let me get rid of these lines. There, okay. And so you can see that. Now RTH Open, what did they do? They sold the open. You could tell that. It's like, man, I can see that coming. Buy, and then the whole moving average flipped over. Here we go. We're trading below it. Short. Boom, boom. Okay. What happened? Wow. They came right back down to here. That T plus 6 high, T plus 6 open, right there. Came back down. See how close those are together? Right? It came down. We knew we were gonna go back. We're not gonna go back short. We're gonna go back long. How did I know that? Because it hit this area here, and then this is a higher low. These aren't, these are higher lows. These are trend change. If you put a, let's see if I've got a, okay, there we go. Now let me change this real quick. I need to remove those trend lines. Okay, so there. Now, you're making higher lows. You have a lower low here, and then you make a higher low there, right? Okay. And where's that? That little zone right there. Those lines. See how close those are together? Now there's your stop may be below here, maybe down to that C plus 7 high, but comes back down, and then what happens? Goes right back up. Boom. Right through RTH Open. Now, where are we going to wind up? Okay. There's your first pullback. There's your first target right there. Pulls back, comes back up above it, and shoots up, right? So you're buying, right? There's your second one. See how close those are together? There's your second one. Right there, right? Chop, 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 right? If you're buying it, okay? Boom, 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 buy. T plus 5 close, okay? I was hoping it was going to go for this, but no such luck, right? So when it turned around, it's like, okay, fine. It's the end of the day. Boom. Close down below it. T plus 6 close. Big deal. Okay? You're out. But you made money. You made money playing these guys, right? You made money playing these guys back and forth. Or not back and forth, but you made money with the trend coming down, and then there's your trend again. It started up here, and it gave you some. You could use that as you could use this the T plus 4 open, T plus 5 close, you could use those as targets, okay? If you just want to scalp it, you know. It's like you turn back around here, boom, right there. You wouldn't want to take the break here because it's still pointing down, right? Wait until it turns around, and then you can buy it right there. Where's your target? Right there, boom. So if you bought anywhere in here, okay, that T plus 3 high, for example, or if you bought this guy when it closed 52.32, back to 52.36, you've got 4 points right there, right? 4 points, 4 points right there. It pulled back, but it still continued because look at that. The whole moving average is still pointing up, still pointing up, still pointing up, still pointing up. So you don't want to get out of your long trade, right? And then you get the end of the day, and here we go. Anyway, I hope this has been helpful. You feel free to post questions. Feel free to make suggestions. This chart book, actually, I'm going to save it out there, and I'll update it in a few minutes because it's got the higher lows and higher highs, higher highs, higher lows, you know, that sort of thing. Lower highs, higher highs. You know, it's trend change stuff. So you can look at those and start determining, okay, have we had a trend change? Okay, yeah, we had a trend change. Somebody bought it there. Stop run. Back up. And it makes stop runs pretty obvious, and it makes also, you know, trends very obvious, especially if you've got it on a little bit different chart. The Align Renko chart is not great for that, which is why I didn't initially put it on there. And I just wanted to put it on for illustrative purposes, but I don't use it on this kind of Align Renko chart. I'm just using you know, the whole moving averages. You know, closed above, whole moving averages turned up, closed above it, boom, take the trade. Closed below it, turned around, boom, take the trade. Because you want a safe trade. You don't want you know, you don't want a trade that's going to come back in your face. If you can help it, at least not hit your stop loss. Like your stop loss is up here, and your target, you know, your target may be down, you know, down here as you exit the cloud. The other thing is we knew that there was more upside action. Why? Because look at this. The whole moving average is back and forth, just, you know, like a snake. And this is just choppy crap, right? Choppy crap. Well, here it is again. Here's your trend continuation, and then there's the end. I hope this has been informative. Hope it's been useful. I posted this out in the free area on Dropbox, and it's called what did I call this thing? It's called 01 Trend 6-Tick Aligned Renko. Okay, so what you can do is you can drop that study collection on a 6-tick aligned Renko chart and see exactly what I'm saying. Okay. See. Came back up right there. See those double lines? Came back through, tapped it right there. Everything's still pointing down. Tapped it right there, and there would be another entry for the downside. I've got 2 contracts off up, 2 contracts up here, and then my first contract's down here at the T plus 3 high, and the second one's down here, and I can't remember why I put it down there, but I could put it down at, for example, I'll just move it down. At T plus 4, there, low. Anyway, like I said, hope it's been useful. See you guys.